The news today has been about this currency pact, that perhaps the U.S. is looking into putting this into some type of partial deal with China. And you quickly saw this swift move on renminbi to the stronger side. Is this a turning point for where the currency goes? What's the path of least resistance now?
I think it's still early to say that this is a turning point. Certainly, I think in the near term, what we would see is that it helped encourage spot and CNH to converge with the fix, which has been very steady at 7073 for 13 trading sessions now. But ultimately, what needs to be a turning point is when the actual ceasefire, it's known to the market. And I still think that the high-level October trade talk is too early for it, and the market should really focus on the mid-November APEC Leaders Summit when Trump and Xi have a chance to meet. And if we look back at the negotiation history, any truce or breakthrough in trade talk have required a personal meeting between Trump and Xi, and I think it will be the same this time around.
Do you see China giving in on actually agreeing to this currency pact in exchange for no higher tariffs? Because it seems like this was always been the tool that they use to offset the tariff impact.
I actually think that the currency pact is always part of what China was willing to offer to the U.S. in the first place, in addition to agricultural purchases and some strengthening in IP protection policy. The reason I said that is that if you look at the USMCA as a template, there is also a currency chapter in that agreement that could easily be applied to U.S. and China and could be easily agreeable to China, because it essentially says countries should refrain from competitive devaluation, encourage market to play a bigger role in FX, and additional reporting requirement in terms of intervention data. I think all of these are something that China are willing to give. What it will not give is if the U.S. goes a step further and asks for explicit stability pledge in RMB, in the sense that we commit to RMB stability around a specific target or range. I think that would go too far, and that from a China point of view, it means it gives up some of its FX policy autonomy. What China can accept is a USMCA template and perhaps some strengthening in the sense that China can commit to RMB stability around adaptive equilibrium level. This kind of language is what it has been using in its own policy statements. It's consistent with what China have been using and have been saying.
They've been trying to do that, to stabilize it
exactly,
already, right?
and also it allows for this, this adaptive equilibrium concept. It allows for some flexibility if the economy weakens, and there's some flexibility in FX to adjust.
So, Trang Lei, having said that, what's your base case scenario for the yuan? We have third quarter GDP coming out next week. Some say the print could end up being weaker than 6%. How will that play out?
I think in the very near term, you are likely to still see some depreciation pressure in the yuan. I just don't think that, this week trade talks will produce, the deal as the market would hope to be. The likelihood is that, the negotiators come out and say they made progress, but that's probably as much as we get for now. And then it comes back to, the weak global growth backdrop, and as you said, which China GDP number that would potentially means further depreciation pressure for RMB. I think in the near term, we could retest the September low. We could get back to 718 or even 719 in the next month or so, until a turning point, that is, if Trump and Xi can agree to a truce in the APEC meeting in mid-November.